welcome to another edition of XFeed. My name is the Schiller. We do this show Monday through Friday. We look at the markets. We try to, highlight our lovely things about NFTs, Web3, the entire market as a whole, and just, it's the past day has been wild for the markets. Part of it's like, okay, cool. At least things are happening, because that means, I guess, it's better than just going completely sideways, right? Right? All right, let's get into things. I really like looking at what the news around the internet has when you type in the singular words. So we got real world assets, we got Web3, and we got NFTs. And as per usual, if you end up liking this video, I would love to ask for your like at the end of the video, but don't like it until you actually enjoy the video. You know what I mean? Because if you don't like it, feel free to dislike. Anywho, for real world assets, looking on the timeline in the news stories, XRP being brought up about it. Real world assets on XRPL from Crypto Potato, whatever the hell that site is. 5 real world assets RWA altcoins trade in August. Okay. Real world asset tokenization demands a dedicated blockchain, says Mantra CEO, which that's kind of interesting, and something that I've noted is I don't know if there's really kind of any steadfast, okay, this is the major place to go for real world assets as of right now in terms of a mainstream adoption, right? When we think of OpenSea, it's like, okay, that's kind of the marketplace for NFTs as a whole, not necessarily like, I guess it's still kind of the main one, but you know how like it was the focal point at the time. And then for exchanges within crypto, obviously you have the Binance and Coinbase, but then when you look specifically at DeFi, it feels like Uniswap is the one for that. So curious to see how the RWA landscape shapes up a little bit. Real world assets evolve finance by tokenizing everything, says Kinto co-founder. Again, everything coming on chain. Kind of exciting. Web3, what are the headlines? 2 of them here. Notcoin to launch story-driven Web3 game with Lost Dogs and Get Gems. 2 different articles highlighting that. Web3 funding holds steady after rocky 2023. Okay, listen, let's jump into this one. This sounds kind of intriguing. Funding to Web3 startups certainly isn't taking off, but perhaps it is stabilizing, which is important after a few quarters where it looked certain to crater. Web3 startups locked up just more than $2 billion in just completed second quarter per Crunchbase data. A very slight uptick from the 1.8 billion raised in Q1. However, it is an 18% drop from Q2 last year when such startups raised 2.2 billion. The only takeaway that I have within these first few sentences is we got several $1 billion across several quarters getting put into having things on chain. That's kind of spicy. Going over to the NFT news articles, does the SEC really have jurisdiction over NFT art? 2 artists sue SEC to get an answer. Okay. All right, very, very different comparatively to yesterday. And then the DraftKings bringing that up. Masa blockchain introduces autonomous smart contracts, revolutionizing NFT technologies. The opportunity costs of NFT madness are still being paid. This is an opinion article. Okay, not going to jump into all of that, but interesting. Just kind of seeing, and we're going to probably do that every time we do the XFeed just to see the different mainstream headlines of the day. EllioTrades, who's a big YouTuber and content creator, says the great irony of this cycle. As time goes on, more and more institutions are loading their bags. Over half of Fortune 500 doing something on chain. Meanwhile, crypto Twitter is losing their minds in the chop, not realizing that the thesis strengthens every day. I hope my brothers hold on. This market is undervalued. Well, the question with all of this kind of stems to what's going to end up having value. Obviously, we're all sitting here being like, okay, stuff that's integrated on the blockchain just in general is going to have bids and going to have stuff that's, built on top of it and probably going to catch a bigger bid over time. But the question being, all right, there is a whack ton of saturation, different narratives playing a huge part, yada, yada, yada. How exactly does that flush out over time? Yes, there's going to be winners, but obviously there's going to be things that, don't catch any sort of a bid. And he highlights within this particular article saying, furthermore, 56% of Fortune 500 companies have on-chain projects. 56%. That is a whopping number. And this is kind of just a funny meme. When you've been in crypto for 7 years, we got tanks on fire, the backyard's on fire, the rain and the wine's getting wrecked, yada, yada, yada. But speaking of wine, if you guys are into wine, next week we are hosting a Spaces through the RWA account. It's going to have SegMints on it. It's going to have the VanLabs on it. Your boy's going to be on it. And it's going to be at 10 a.m. Eastern time on Tuesday. So if you guys are wanting to come check that out, be sure to set your reminders for that. And we're going to talk with the VanLabs, who is a huge player within the wine space. And it's crazy to learn about all the different things, because apparently wine investing, tokenizing things, alcohol on chain, all that kind of stuff. There is a wild market for that. And again, if you're wanting to hear some other conversations I've had with different individuals in that space, check out the RWA SegMints podcast that is in the description below or in my X bio. All right, moving on ahead. Twitch's market share in hours watched, if you guys are here on Twitch, hello, declined while YouTube and Kicks have increased in the past year. Now, speaking of streaming services, I still will never, ever, ever forget the fact that Valhalla basically sold out with the notion of, we are going to create a Web3 streaming platform. Everyone saw different issues within like the traditional markets of the Apple App Store, having some issues with certain things. Not, we've seen people getting demonetized or channels taken down on YouTube for certain like crypto related things, but we're not sure if potentially there's a little bit more to that. And so Valhalla seemed like it had a very huge spot for that. And I'm pretty sure the founder, Alex, was involved with different streaming platforms prior to that. But then obviously they had a huge pivot where they decided they were going to make keyboards instead of that. And I just feel like, what in the hell happened? So anyway, going over what they have just on the site here, we'll read this super quick. Valhalla is a 9,000-piece NFT collection centered around modern gaming culture. Each avatar is unique and immortalized on the Ethereum blockchain. They are programmably generated by randomizing over 400 unique traits, including an officially licensed IP from pro esports teams such as Sentinels, SK Telecom, T1, and JD Gaming. Now, I'm pretty sure there was significantly more than just those four, so that's interesting to me. The artwork is created by artists who have worked on gaming titles such as League of Legends and The Last of Us. Our holders have participated in a host of digital experiences, including the ability to reroll traits on-chain, waging clan wars, and trade on our commission-free marketplace. They've also enjoyed in-person community events in Los Angeles and New York, where our most active members were featured on billboards throughout Times Square. Again, what the hell happened to the Web3 streaming platform, and what the hell happened to the markets tonight? Oh, jeez. $2.9 trillion dollars wiped out from stocks this morning due to fears of a global recession. The worst day since the 2020 COVID crash. Kind of wild. I don't really know what happened other than just like the headlines again of people feeling a global recession. People have been saying we've been in that for a while, but wow, what? 2.9 trillion. People thought crypto was volatile. Oh my God, look, Amazon's down 12%. That's nuts. Massive bullish crypto news on this red day from Tyler D. Morgan Stanley has been given the green light to its advisors to offer the Bitcoin ETFs to their clients, starting with IBIT and FBTC. Widespread ETF onboarding is just beginning. I think it's wild, as someone who's never really had a financial advisor, potentially could have used one, you know what I mean? But it's weird to think at the same time that there's like a lot of people that are like, yeah, I'm just going to listen to this other person. And half the time, how do we know if that other person is actually successful in what they do, right? And that's where things come in the on-chain, where it's like, okay, you can have the history of something, they can share it. It's not just like a paid gig. They finish college and they're like, hey, we'll hire you as a financial advisor. You know what I mean? All right, so GOATS is a very old collection within the Web3 realm that came, old being subjective, but I'm pretty sure it came back around in the 2021-ish era, and I noticed this and I thought it was interesting. So they're saying the International GOATS Association has 3 foundational leagues: GOATS Poker, GOATS Golf, and GOATS Football. Prizes, season info, and structure to be announced soon. And I was like, okay, so this kind of sounds like something that is them trying to play off of fantasy sports, some kind of betting, some kind of league, whatever it be. And it just made me think of the different collections out there that have a community of some sort. And okay, it was created around the art or whatnot. And then now the notion is we have to find other things that everybody collectively enjoys. Well, poker, golf, football. Okay, that's easy to go to. And I'm curious how many of these other bigger collections really kind of double down on that, because I feel a lot of collections do poker of some sorts, but when we get back into the football season, yada yada, is everybody jumping on board for it. Duplo is highlighting the fact that CryptoPunks, the reversed facing CryptoPunks, are gaining some traction. They got 3 ETH volume, 0.09 ETH, not a crazy amount. I feel like at one point these were like all the way up to an ETH, if not more. And Art Gobblers, this collection got canceled. There was a whole bunch of issues around it, yada yada. These were going for an insane amount of ETH, and now they're at 0.04 with basically 0 volume for it. But CryptoPunks is doing a little bit better, and the timeline, things that have happened within this space is just absolutely crazy. Now, looking at actual CryptoPunks, well, I guess like the V2 versions of them, 23.99 ETH, otherwise $72,000. If we can go and search for a hooded one, which is always fascinating to me, because when you try to explain that certain traits to people make something worth way, way more, you're like, nah. And then you're like, yeah. And then they're like, nah. And you're like, yeah. So we are up to $200,000, and we see no hoodies thus far. Maybe there's none. There we go. So $349,000, otherwise 116 ETH for a hooded CryptoPunk. So when we look at these other collections, again, people want these rarer traits, et cetera, et cetera. If you get them, sometimes they are worth significantly more than the floor. However, that be it rather illiquid. Someone who minted V1 punks, again, there's V1 and V2. We just looked at V2. The V1 punks 9 months ago and hasn't touched them since, just sold 50 plus into bids, sending the floor down 50% to 0.6 ETH. They were at 2 ETH floor just 2 weeks ago. Bid ask on Blur is currently at 0.89. So again, 23 ETH for the V2. These were at 2 ETH until an immaculate dump that just happened. Holy sweet mother of pearl. Kind of weird to think about as well. Just, okay, what's the thesis or the mindset behind the individual selling these? Is it a loss of confidence within this particular asset? Is it the realization of, oh my goodness, the ETH ETFs had a positive inflow for the first time the other day, and they want to have more exposure to ETH and not the NFTs? Is it a look at the global macro standpoint, and they're going and selling this to cash out and have US dollars, Canadian dollars, Australian dollars, whatever it be? You know, when you kind of think about it for a second, you're like, what is the behind the scenes aspect for this? The block posted an article saying crypto liquidation surge amid stock market downturn. Going to the site itself, it's saying the cryptocurrency market has experienced over $272 million in daily liquidations amid a stock market downturn. Quickly going through this, the drop in crypto in the past 24 hours, a total of 81,838 traders were liquidated. Basically 82,000 people were completely liquidated on their positions, which is wild, with the total liquidation across centralized exchanges amounting to 272 million, according to data from CoinGlass. Bitcoin was the leading cryptocurrency in the liquidations, with almost $78 million liquidated in the past 24 hours. Among these Bitcoin liquidations, almost 44 million of them were long positions. So everybody getting comfy. If we go and look over at the fear and greed index charts here, at least based off of coin market cap, it's like 58 neutral. It's funny, we see this kind of fluctuate all the time. Right now on the charts, if we go 24 hours, Monero, which is the privacy coin, right, and we're up 5% on that one, which is very interesting, with the most losers being Helium, MakerDAO, AOS Network, and Beam. Kind of crazy just to see the massive swing within the markets overall. With Doodles, Super Pass is now climbing above 17,000 mints, which we talked about the other day, how they're having the kind of open mint where you're able to buy one of the passes for like $6-7 and able to accumulate some of the different things they do with their albums, the shows, yada, yada, yada. It's time we start having a conversation around the fact that a Web3 NFT company was able to raise 6+ figures in a non-dilutive way that guarantees unique and special experience to those holders. So the questions about NFTs coming back and the way that we're going to see things in kind of a different realm, well, this might be an example of it. Would we have ever seen someone going for a collection of notoriety selling an NFT for $10? Absolutely not. Back in the day, right? We had certain open editions from artists that had larger names, but we never really saw any notable collections have something that wasn't cash grabs. Not like necessarily the right word, because we had different collections that were offering companion collections that were free of charge, yada yada, but there was always this, okay, here's an opportunity, the market's frothy, can we get 60 plus million? Hell yeah, Bruce, right? And this is for like a lot of different collections. And then when you see the market right now, you're like, damn, that was super smart of them. But at the same time, you do kind of see like the mass fallout where people are like, hold on, why are things taking a while? What's going on with this collection? How come this, that, and the other thing? And that has happened for like every single collection. We could go through almost every Discord. There's somebody that bought the absolute pico top of different collections and they're like, what's going on with this, that, and the other thing? And it's questions galore. But I think really the most part is that, like, as we're sitting here and we're seeing bigger and bigger adoptions of things, the change of whatnot, we still at the same time see where collections are trying to give notoriety to those OG collections. And I think generally speaking, people do have that kind of merit. So the once conversational, oh, these are historic NFTs, now gets placed on the original collections, and everybody's just hoping that those brands, IPs, et cetera, do something phenomenal. From VanEck here, the data shows a clear trend. Crypto is the top investment interest for both Gen Z and millennials, with 59% of Gen Z and 57% of millennials selecting it as an ETF investment theme of most interest. So this is kind of interesting from the perspective of what is going to be the future generations that are jumping into this. What are they buying right now? There is a big, huge back and forth that you see on the timeline from people like Peter Schiff, who's talking about gold and legacy assets per se, where, again, a lot of the people, as we're seeing with this data, it's like 60% of people are like, yo, we prefer to do crypto. And obviously that's not for everybody, but it is kind of wild to see. Now, the timeline, I'd also say, is kind of quiet today, to be honest. I've seen a lot of different political takes, a lot of takes on the Olympics, et cetera, but, you know, you're sitting here and you're like, damn, if I'm a collection out there or somebody of note, am I wanting to post any positive news today? Well, the market's massively in the red. I feel like generally no. So I feel like we've not really seen mass amounts of things on the timeline. I've been looking all day to see if there's anything kind of spicy, to be totally honest with you, but I see almost nothing of the sort. So apologies for a little bit of a shorter show here. Normally we go about like 20 to 30 minutes, but we're going to end it about 2 minutes short. So holy supper and succotash. But I appreciate you guys coming through again. If you are wanting to attend that Spaces next Tuesday, I do have it retweeted on my timeline if you follow me on X, and I appreciate the hell out of you guys that do. Enjoy the rest of your Friday and have a phenomenal weekend. We are in August, only another like month left of summer, and then